Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting us today. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time, and this stream's about integrating Bookmap order flow tools with auction market theory using a volume profile in the intraday developing time frame. And again, thanks for visiting. Can I please get a screen and audio check in YouTube and the Bookmap Discord community? Thanks, Chirac. And how we doing in YouTube today? Well, everyone, welcome again to Trader Lab. This stream's about integrating Bookmap order flow tools with auction market theory using a volume profile as a chassis in the intraday developing time frame. It's based on structured trades that I've shared in the Trader Lab, and the idea of Trader Lab is to help traders understand the business of trading and also for the collective leverage of the group. Doesn't matter how long you've been trading or really what you do. What does matter is that if you're not creating sustainability in spite of the winning trades, there might be a little bit more to it. It might actually have something to do with statistical probabilities or edge. Everybody has winning trades. You know, the problem, of course, is we don't have enough of them and we have more losers than winners. So we keep doing the things we do, trying to improve it. But sometimes the things we're trying to improve really don't have an edge no matter what we do. But we always have random winners. So the reason I created Trader Lab was to help traders understand the business of trading and how to separate what we imagine it to be from what it might actually be. And of course, you have to do the work. You have to find your groove or the time frame or rotations that you operate in, and that's something that is an individual journey, if you will. And many of us, we come into this, and I think depending on what you've been exposed to, you might think it's almost like a video game, or that there's a pot of gold here, and all you have to do is click your mouse. And if it was only that, if that was the reality, but it's not. This is really a business of probabilities and random outcomes, an environment that's 100% random 100% of the time. We can get ideas in the sense of what the market might do, but in the end, it's really up to the participant behavior, and that also has to include things we don't know. Reports, someone sends out a tweet, whatever happens, things that just come out of left field, geopolitical events, whatever. All those random inputs come into what makes trading what it is. A random environment. So if we're operating in randomness, we can't solve for certainty. We actually have to solve for randomness. And that's really what Trader Lab is about, helping you understand the business, giving you some tools to work with, ideas. There's 60 PDFs of structured trades I've shared. Plus there's more advanced processes in Trader Lab. There's a library of webinars, as well as a document section, and a lot of contributions by other participants. It takes the community to make the Trader Lab what it is. It goes beyond any individual. So with that in mind, let's move forward. We have a lot to talk about, of course, and there's a contest that I just found out about today. I'm going to tell you about that too. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss, and it's not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, this is not a trade calling room. This is for educational purposes only. We get into real time, we'll talk about it. In the end, you have to find what you relate to. And this is why plug and play or really imitating somebody else, an influencer, or just somebody who's posting wherever in any chat room, anywhere, it's always the same. And you really have to find what you relate to, and then you have to vet it, because everybody has winners and everybody has random winners. The differentiator is, what about you? You have to keep the metrics. You have to find what you can define that has anchored inputs. At least that's my experience. And anchored inputs means if the environment is random, then what you use in your process needs to be consistent. If it's inconsistent, then you cannot measure it. The idea of consistency on the front end or the inputs is that now you have defined something, and when the behavior matches up in this random market environment, what is the outcome over a large sample size? Then you know if you actually have an edge. And of course, you have to do the work, and nobody can give you an edge. You actually need to understand what creates edge and then put it together and make it your own, because you'll never be able to execute somebody else's plan. Ultimately, you have to execute your own. Now, this. When I first saw that, I saw this, I said, really, why are we doing this? But, we had a contest a few months back, and it was for, global win free global plus, and it was really terrific. And several traders, and it was about a screenshot of your workstation with Bookmap, and all you had to do was post it on X or Instagram or LinkedIn. Fine. But there was one photo I remember specifically, one of the traders who posted had his dog sitting at his workstation in a chair with his paw up on the workstation near the mouse. And it was just hilarious. And we thought, I know I speak to so many traders over the years, and so many of them talk to me. They say to me, oh, my cat walked over the keyboard, put on a 20 lot, whatever. All these things we hear about. Now, whether that happens or not, who knows? But it's interesting. What about your trading buddy? So if you have a photo of your trading buddy, and all you need to do is have your trading buddy, your pet, and I'm sure there's other pets besides cats and dogs. That would be something that would be curious. And with Bookmap in the background, and then just post it using hashtag Bookmap Pets. And if you do that, you can win a full month of Global Plus, and that could be pretty cool. Plus, there's going to be a pet calendar or something that's going to come up. I don't even know. All I can say is, if you got a pet, take a shot, literally and figuratively. I don't know about goldfish, but that's not my call. So let's go take a look at the higher time frame. Let me just make sure I got this. Now, I wasn't here yesterday, but this is yesterday. But if you guys remember, on gotta get my days together here. Friday, so Thursday, this set up the shorts on Friday. Monday we were closed, and this is yesterday. So this selling, and this was the target on Friday, 56, but the auction was not finished. We had closed, we were down here, and that stream is available. It was pre-holiday, long liquidation, the logic behind it, the plan. If you haven't taken a look at that one, you might want to, because it showed not only this structure, which is RTH candles, but also daily candles, if you will. But it also showed the ETH and how the ETH high was right here, which set up this, and then this is our continuation. Now, yesterday, and I wasn't here yesterday, this is an outside edge. Now, nobody knows when you have this kind of thing going on how far it's going to go. Everything's clear in hindsight. But here's what we do know. The market goes up to go down, goes down to go up. The market goes up to go down. And what it does is basically it cleans out all the weak players, goes down, and then goes up. So then possibly back here. So for today, we have a couple areas that are kind of important. The 2675. 2675 was the highest volume, and I like to think of it as the fair price, where most of the volume was done from yesterday. And yet we closed up here. So basically, let's remember how this works. If you get longs in here with sell stops, sell stops, sell stops, what's going to happen if we come down? Well, we're going to take them out, maybe take them out, maybe, who knows, right? You don't know. I don't know. So, but once we get going, then you have to look at who's getting taken out and where's the stops. Well, this would be the target for me. If I was trading yesterday, this is where I'd be going, and that would be it for me. I'd be very thrilled with that and let it go with that. This is always a possibility, but this is kind of how I operate. It's not a recommendation. It's just a way to slice and dice. You also could have been getting out here. This is also an important level previously. So you have different levels. This is how the auction works. Now let's come back from the other direction. This looks, you might say, like we found too low. If we find too low and we start squeezing out the shorts, so what do we have in here? Shorts here and shorts in this day, and the squeeze came on yesterday, and then we anticipate potential continuation of the squeeze today. So fill the gap, get up here, and this is the highest retail price, 70.50 for this whole thing. All this volume is concentrated here, and the market tends to come back and check volume. It's the nature of how an auction works. What's too high, what's too low, and what's fair? Well, we don't have to get back here now, ever and never, but the fair price for this, from this swing low to this swing high, is there. So the possibility exists that we will get there sometime, maybe today, maybe never. It's not a recommendation, it's just the nature of how the market works. And then along the way, it's going to rotate and do its thing. Hope that makes sense. How are you guys doing today? You guys doing all right? Now let's go take a look at the opening context. So what did we do here? We opened out of range. What does it say? So out of range. So we had yesterday's high here. So we opened higher, outside of range, outside of value. So basically we're out of balance. So what that suggests is either we can be thinking about a fade, or possibly we want to use any counter rotation to think about getting long, since we're in the squeeze mode. So now here's a couple levels that are important to look at. In the ETH, this is a low volume node. And what it is it's an area very similar to what something like this looks like, where there just isn't volume. Now this is just the limit order, but I'll show you what it looks like. But it's an outside edge of what's called a distribution, and it was out here. And there was liquidity sitting here. So this is an area to be thinking about, to observe. Now, we don't call trades in the Trader Lab. The idea is to observe locations for behavior. So for me, this is a location. And here's the other thing about these areas, these low volume nodes. A low volume node is an extreme. Let me give you an example. If in your store something costs $1, retail price, high volume, there's a lot of volume there, buyers and sellers agree. But let's say it goes on sale for 75 cents. It's not going to stay down there. Well, it'll only be down there as long as the sellers are willing to sell it down there. But if the buyers perceive this as a sale, or gee, look, it's lower than the retail price, then we may not spend time, and then we'll come back to retail. That's kind of how shopping works. Well, out here was where that sale price was, the outside edge. Now, the other thing about these low volume areas is they're not auctioned. In other words, the market comes out and doesn't stay here. When we're in a high volume area, we chop. So out here, it's outside edge. Now, what happens at outside edges is the market can come through them. Now, that's the thing about these. And of course, it doesn't have to even get there. This is part of the slop of trading, but we have it on our chart. Now, let's look at a couple of things here. If we know there's a squeeze going on, which started yesterday, then there's a couple things we want to be thinking about. And the other part was this morning we had the JOLTS job report at 9 a Central Time, so half hour after RTH opened, where I'm located. So those are important elements. So one part of it is we know the market's getting squeezed so far. The other part of it is that we know we have a report, and we might not get strong participation until after a report. So what are we going to do? Well, since we don't know what the market will do, when it'll do it, or any of that, then we have to follow a trade plan. So I'm going to talk a little bit here about what you might have done. Now let's look at some statistical probabilities, which may give you some guidance. and you have to vet these for yourself. We're opening higher outside of yesterday's range. This is yesterday's high. Taking out the first hour's high or low is about a 98% probability. That's called the IB, our initial balance. It's right there. Taking out the ETH high or low, 97% probability. Getting to the overnight volume point of control, 81% probability. It's there. The ETH high, 79% probability. Taking out the previous high or low, 67%. We already did that. And let's see what else. That's the ones that are most material at the moment. There's a couple other in here. Hey, let me just see if there's anything else down here that we want to look at. Oh, that'll do it. So now we have to think about trades. Now, the thing about trades is, again, you guys have to vet any trades from any source. You can bring anything you want here, but what you need to do is know if it has a statistical edge. In fact, I've shared 60 PDFs of structured trades. You can download these. And these are, I'm not a vendor. This is not a trading course. These are just things traders are asking me many years ago what I was doing. I threw them together. Now, the thing about it is, you can look at these and get some ideas. There are structured trades that you can reverse engineer, and that's all these are. These are trades. And it's not a complete do this, do that. There is no plug and play. This is from 2020. So, and also some of this is research I was doing with Bookmap developers, and that's just what this is. So this is not really material. And some of these have been incorporated into add-ons. Others have been, as they say, jettisoned. So these are available to you. You can use the link in the bottom of YouTube. There's also the book. There's liquidity. There's some phenomena here, order flow. A lot of things you can look at. And again, they're not plug and play. You have to vet ideas. There's a lot of material in TraderLab. Other traders have put together the idea of TraderLab. It's a community of like-minded traders who come together to leverage their collective experience. The idea is we all grow and do better together. One thing about this business, it doesn't matter how long you've been doing it, you're always going to try to get better. It's part of being somewhat competitive, I would say. And there's always room for improvement. Doesn't matter. I'm doing this 46 years. I'm always looking at it, always thinking about it. Thinking about how can I shave a tick here, a tick there. It doesn't matter, But it's something about, it's no different than an athlete or somebody who's a high performer in any endeavor. You only get there by wanting to be better, and you only stay there by practicing and honing your craft. This is the RTH Open. So what we're looking at here is we open here, then the possibility is, by the way, I didn't give you this, overnight mid has about a 68% probability. So, and again, with that report coming, we just have to be conscious of it. So now I'm going to show you some structured trades, okay? These are just trades I've shared. Every trader adjusts, modifies, and reverse engineers and does everything. So when this opens, I'm looking at two-sided trade. So again, for me, I'm very patient. I have gotten over the FOMO thing. I really have. It's just cost me too much. So I decided after I measured it, I kind of figured out that wasn't a good plan. So instead, I've kind of gone the other way. I take many less trades, if that sounds right, and I'm going for larger rotations. That's just what works for me. But every time you put a trade on, you always have to be thinking about it. If you take more trades, depending on the edge you have of getting risk neutral, so you need a statistical probability for each individual trade you take. So they should be structured so they're measured. If you don't have a positive expectancy that really gives you somewhat of an edge there, you're going to take more stops. And the thing about stops is we all take stops. But what about are all stops created equally? So if you're trading from wherever, let's just say here here to there or here to here. Is that the same as taking a trade for a higher time frame target? So example, in this scenario, we have the ETH high with a high probability, and we also have this target up here, which is the highest volume. So would you be taking shorts in this? I'm not saying you can't, but if you know yesterday we had a short squeeze, if you know yesterday's retail price, and there's another piece I forgot to give you, is here. And if you know in the ETH low, we tested the highest volume from yesterday's RTH. So in the ETH, too low. So if this is too low, because we tested it, doesn't that give you a sense of maybe looking for longs? And if we know this was an outside edge that was too low and we rotated back, does this also give you a possibility that we want to be only on longs? Unless, of course, you trade short rotations. But what I'm talking about is trying to align for larger rotations. And you could do whatever's right for you. You know, it's not what I do, or anybody. It's really what you can relate to, and then you have to prove. The proof of concept comes from the work you have to do. So we come out here. Now I'm sitting here and I'm going, well, two-sided trade, I want to get long. So for me, I've only taken long. And again, it doesn't mean you can't do anything. You know, you do whatever you want to do, right? So let's look out here. This is my outside edge. So I'm looking at this and I'm saying, well, I've got the overnight mid, which has a good probability of getting checked. And I have this. And the other part for me on this one was the resting liquidity. So I mentioned that in the Trader Lab. You know, what I do is in Trader Lab, I don't call trades, but what I do is I say, well, observe this, take a look at that. And it doesn't mean anything more than that because nobody knows what's going to happen. Overnight mid. So I see this and I'm looking at this and I'm saying as well, I'm thinking about if I'm under here, and at the time, my developing retail price is here. So I'm rotational. If I'm rotational, the only way I operate, and again, it's just me, is outside in. It's called mean reversion. So for me, the reversion trades are outside longs. And of course, the trick of reversion is where? You know, does it come here? This is my location. That is my preferred, if that's the right word, location. The thing about this was this resting liquidity. So that has my antenna up as well as location. You know, this is like real estate. You know, location, location, location. Well, that's a location. If I take trades in front of this, I'm, of course, have to be conscious that we could come down here or wherever, wherever it goes, it goes. So that part, we don't know. So out here, I'm thinking longs, and but it's a bit of a tricky deal here, because now I'm testing inside of yesterday's range. So I found it a bit conflicted, only not in the sense of getting short, but just where to get long. It's one of those things where do I take a long here? And for this one, I got long and I got a scale because I'm trading the reversion and I scratched. Okay. Went down, boom, scratch. Okay. So that's one. Then we start going down here. We're under the mid, and then we have the report coming. I actually had one more before this. I'm sorry. Doesn't matter what I do, really. But I did have another one. I think it was this. Yeah. I also took one. I think it was here. I can't remember. I have to go look. But I had two scratches. So one was here, and I had to clear this volume up here where the sellers were. This is where the absorption was. So I had a long scale, got taken out. Same thing. Long, a scale, resistance is here, right there, there. That's resistance. Taken out. So two scratches. Getting annoyed, but That's okay. That's emotions. Now this isn't my next trade was here. And this one got away from me a little bit. I didn't like my entry on it because it went too fast. So I got long up in here. Stop is under here, going for up here to scale. Got my scale. It's still mean reversion, you see. Got taken out. It's 3. Came under here. Now this, when we came back under here, then I was getting a bit, right there it was questionable for me. I said, well, if I can't hold this level, then, and if I can't get above it, then that could really suggest something was wrong with my approach in the sense of my plan. But I get another long, get long again, scale again. Then it's the ETH high because of the probability, which is wherever it is over here, and then going for 70. So that was the last one. Got the ETH high. So scale, ETH high, then 1. Going for up there, and that one got taken out. So that's as far as I've gotten for the day. So not too exciting, just two-sided trade. So we'll see what this thing does. Now, we have a possibility of coming here, but it really depends what happens down here. So this is too high. You can see this distribution. So this price we auctioned up here. You see the icebergs, too high. Don't forget, we have NFP tomorrow. That's a big report, So whether or not we'll get to that 70 now, ever or never, up here, there's no way to know. So the idea of this is you just take your trades, you manage your trades, you take what the market offers, you just do your job. If you've been getting stopped, which happens to all of us naturally, it's really about context and trade location. We're all going to take stops no matter what we do, but it is really important to know. So it isn't just you see a triggering structure and that means you trade. You need to have these locations overlaid on the condition of the market or something called the context or in alignment with the context. And then if you understand how the profile manifests itself, how behavior is reflected, then the idea is to understand the changing condition. Up here, the condition changed. Once we're under all this, then it sets up rotating down. Once you're under this, then it sets up potentially coming down here and maybe even coming out the bottom. Now, there is not a high probability of getting to yesterday's point of control. It's like 38%, but doesn't mean that it won't do it. There's also not a high probability of taking both the ETH high and low. It's around a 20% probability to get down here. So these are not high probability statistics, but it doesn't mean you won't get there. Not being a high probability doesn't mean it's not going to happen. It just means what it means. So we can come under here, get stops, and then we have to see if we come back in again. Because then if that happens, we have just basically the market's in park and it's two-sided trade. That would become what's called a neutral day. And it just means both sides are active. Nobody's running with the ball. So we'll see how that settles. In the meantime, you guys have any questions? It's pretty simple kind of day. It's just you pick a side, you have a plan, you have trades that are specifically aligned with that context. You know where the locations will be as they develop, and as the market changes, you adjust those locations. If your trade shows up at the location and you have a qualified triggering structure, you would put the trade on and then you do your thing. And either it works or you take a stop. The idea is to try to get risk neutral. That is the first metric you need to vet. Know you have an edge for getting risk neutral versus taking a full stop. And we all take the full stops, of course. course. But if you have an edge, then the possibility exists that you can get risk neutral. We have some absorption over here. There's your icebergs. There's your buying icebergs. This is the mean. So outside in, we'll see what happens over here. We get inside. You see the liquidity coming up under the book, thickening up over here, and possibly skewing this. And this might be mean reversion. For me, I've already done my thing. I would be a little more patient. It's not a recommendation. You guys know what you will do. This might be setting up reversion back here. If it has enough range, it's in your plan, you can do something with that if you have vetted it and you have a trigger. The outside edge is out here. You can see it there. That outside edge is a high volume node, and this was absorption. That sets a retracement up to here if we do revert. And it doesn't mean it will, it just means it might. This is what mean reversion is. It's outside in trading. The thing about mean reversion, getting long here, you really have less to lean on here. The structure for the long is there, and we have something developing over here to observe. And we don't know what it'll do, of course, but this is important. This pulled over here. So this is dark. So we have to see what happens over here. Okay, these buyers were absorbed over here. We have to see now if our buyers are still interested in this. So we'll see. Nothing really to do here, just observe it. If you don't have a plan for this, then you just sit back and study it. Think about it. Why does the market behave this way? Guma in YouTube, hi. The probabilities are generated from Investor RT, and they have a tool in there. And for example, these probabilities, which you guys all have to vet for yourselves, it's about 1,051 days of data. So, and probabilities are like anything else in trading. The best you have is maybe. So maybe they'll do this, maybe they'll do that. And the thing that's difficult for us is the route. What does it do? Because these rotations are random. We don't know. It may ultimately get to the target above, which is 70, or never get here, or do it tomorrow or whenever, or not. It's not the thing. So, and getting to the ETH high is a good statistic. Now, the thing about this that makes this so interesting to me, this is the highest volume or the retail price from yesterday. That's where most of the volume was. We tested it in the ETH. The way, if you want to think of the auction, if you've ever been to, with an auctioneer and all that, it's all pricing. Well, what's too low? If the shoppers, which are the participants, at the time, remember, this is dynamic. So at the time they check this is too low, then there's a possibility we won't get back here. So if this is too low, and at the open, the RTH open, the overnight volume point of control is the retail price here. If we can get above this, it suggests the possibility of going up to the next higher level, which was at the 70, after you take the ETH high. Remember, why would we think ETH high may be ahead of ETH low? Because we already checked an important price. So that's why, for me at least, coming in, it was this. And then up, and it doesn't go, it doesn't go. Neither here nor there. That part, no idea. Willers, you're asking about the 35% probability. Well, no, nothing's negated in trading. You know, it's all possible. I mean, there is no such thing as negating anything. You know, something that has a 5% probability of happening does happen. So it doesn't really mean anything. Um, the thing is, if the direction of the market and the statistics and the context align, that's when, for me, these statistics have, are really usable and I believe give an edge. When the context is not in alignment, then those statistics, you have to kind of put them in their place. This is still very important, yet it can do anything. So, for me though, my anticipation was longs. I traded longs. I have not taken a short. Doesn't mean anybody else can. Doesn't matter. You could trade both sides. I trade both sides. I haven't today because the longs kind of came right up to the beginning of the stream. But now, now it's sit back, observe, and what's the next trade? Remember, this is important out here, and so is this. We can come out here, take out the longs, because this is the current low of the day. We can pop under and then come back in, or go wherever it goes. So there's no way to know. Introductions in YouTube has asked me a question about market memory. Well, for me, what the market remembers is what was fair and what became unfair. The market's tendency is to go back and either find something that's too high or too low, an extreme, or go back and check retail prices. It's like too high, too low, or what's a fair price. This is the current fair price, this yellow line. It's called the volume point of control. Notice what came in back here again. You see, there are ways, and nobody knows, so if we're trading mean reversion, which is condition of the market, is outside in trading, So the thing is, and we don't know, the whole joy of trading is the randomness of it and the idea of when you have to make decisions about the trade, it is not making it up as you go. It's really about knowing where it might go and what's going on here. See this liquidity coming in, So the part that's so joyous in all this is where's the right place? Is it there? Is it there? So that is what makes it hard. So there is no way to know until hindsight. So, but now let's look at what we have. The buyers were here. The stops came out here, 213. What I like to see, and it's not a recommendation, you have to vet this. I like who takes the other side of these stops. It's these guys. It's the icebergs, the passive participants, the limit order book. That's who takes. These are market orders. If I see stops coming out, sorry, wait, hold on. Yeah, 198 sell stops coming down here. I see icebergs. I see resting liquidity. And if I can get a buy trigger, and even this, I have no compulsion, and that's the right word here, to do anything right in here. I do think, though, this is what's really important. This is where we're trying to go with this. Now, the other part of mean reversion is where's the outside edge? That is a very difficult piece because we know if we get this, that's mean reversion. There's the mean. This is mean reversion. If you took this here, you'd get scaled there. You get taken out here. You'd have to put it back on again. Get scaled there. Not a recommendation. It's a head, by the way, and then potentially back out somewhere out here. That's what this trade is. But and it's not a recommendation, it's just a possibility. Every trade is just a possibility. It might do this, it might do that. That's trading. What is important, though, I think, is to know where you're going to trade, the condition of the market, and also have a way to define change. When the market changes, you got to stop. For me, if I take 2 stops on an idea, and my thing is 2, so I take 1, and if I'm out of alignment with it, or my location is poor, which happens, I'll take a stop. And then I'll look at it and go, well, because I look at it like I'm probing. I'm not saying it's a good idea. It's just what I do. There's no perfection or precision in this. So if this holds in here, then we can get back there. If it doesn't, it's going to fall out the bottom. We still can get down here. And then you would have to see what it does. Because that sets up the possibility of just sloshing in here. So it can still be workable. But you have to make sure you have enough range. So the range here, if you do get into the outside edges, and again, it can be under here, it can be out here, or not. I don't know if we're coming under here. It's not my job. I couldn't tell you. I know wherever I get long, if I do, I'm coming here. That's my objective, and then possibly out here. And that's all I'd be looking for at this point, unless it changes. And that's not a recommendation. It's just what I already anticipated. It doesn't mean I'm going to trade it, and it doesn't mean the market is going to do it. I just know conditions and what might happen. So what I'm doing is anticipating what might happen. And then if it does, then I have a trade for it. That's a part of a plan. They're in alignment. If what I think might happen, which I'm waiting for, does not happen, I don't have a trade. So it's not more complicated than that, but what's complicated for us is the randomness. Is it going to do this? Is it going to do that? And we go, I don't know. And then because we don't want to miss out, our senses are heightened, and then we get into the FOMO thing, and all that. So those are the things that make it very difficult to trade, consistently, and to create sustainability, because we're constantly pushing back against our psychology. So it's psychology and randomness. Looking for certainty where it doesn't exist, being in a random environment really will mess with you. So here, potentially there, or here, wherever. But again, the best I would be able to do with this right now is to try to go here. And this thing could do anything. The thing to be aware of is that there's stops sitting under this low. This is the first hour's low. We can come under here and still come back. So that's another possibility. So we have under here to come back. We have in this area to come back, which we've done here and here. That's it. If you don't have trades, the thing you should do is just sit and wait. Don't feel compelled that you have to do something because you're sitting in front of the screen. As far as introductions, the swings on the composite, everything is fits inside itself. It's a vertical integration of time frame. So the 70 on the composite is the same structurally as this, which is a developing volume point of control, or the highest volume for the day. All that 70 is the same thing, but it's for all the volume in that composite. They all work the same way. This down here, this naked volume point of control, was where the highest volume was yesterday at the close, RTH close. So this is stable. It doesn't change. This one adjusts based on where the volume moves. So wherever the highest volume is. So the nature of the market is to always be thinking about this. It has a tendency to either come back here, which is what it did, which might mean, remember, that this is too low. In the ETH, this was too low. So we have another landmark or outside edge here. since there's stops under here, there is a possibility that we're going to take these stops out under here. No clue. And then that's your retail price, and then 70 is a higher time frame retail price. So the market tends to go to those prices. Does that make sense? So it's just what it is, you know. It is what it is, and this is the day you have. Then you have a plan and be patient. You know, if you're sitting here and you want something to do, this is not where you do busy work. This is where you're really a hunter, and you want to be very selective in what you do. This is interesting. This is yesterday's value area high. 70% of the volume yesterday took place below this level, yet the highest volume was here. That makes this a very important level. So for the market to hang out in here or go higher, we really want to try to stay above here. Doesn't mean it will. And if we do pop under here, we come back in, that still sets up reversion trading. So those are just things to observe and see what happens. So let's see what happens. You guys have questions? Not too much going on. Please give a like if you're visiting in YouTube. Hope you get something out of this. Um, you know, today, some days are pretty wild and other days are just this. And the thing about the idea of the Trader Lab is to help traders understand it isn't a one size fits all. So, you know, you put your indicators together, you curve fit them, and everything is wonderful, but yet the market is different all the time. Every moment is unique. You know, if in this condition, other than, of course, this, what we have to be conscious of, and whatever, you know, happens down in this area, in this, this is a rotational trade. So if you understand the potential, nobody knows what will happen. If you understand the conditions of the market, then you're only going to be, I'm not going to say only, but the primary objective here would be longs to come back here because that's mean reversion. Now, the thing about it is, if we fall out and then that structure falls apart, which it can, you know, if we get under all this, then all bets are off. But for me, and this is again just me, not you, because I don't, we're all different. If I come out here, I'm still going to be on longs, and these are mean reversion longs. So that's what these are. The idea is to come back here. And this is something I focus on with in TraderLab because most of the time the market is rotational. It's this, you know, it's outside in, outside in, and outside in. So if you understand the condition, you can develop a plan to operate it. And then when per your vetted trade plan, this trade is qualified, if it was, you then vet a trigger for it, which is this. There's your trigger. Here's your test. This is a potential long in here. The scale is there. This is a structured trade in the chart 11. You know, I don't call them, so I just, you know, but these are all in those PDFs and plus many of the webinars I've done. They're all available to you guys. You can use the link in the bottom of YouTube if you're inclined. If you want to visit TraderLab, there's no cost for it. Okay, Alex. Well, Alex, yesterday's break is 6409. You had a short bias. I understand, but look where what we did at the end of the day, and the extreme we left, and the squeeze. When you see that kind of behavior, you don't, in my opinion, I'm only telling you, about me. I would not be joining the shorts. I'd be using counter rotations to get long because we found too low. We took all the longs out. Well, I can't say all, but let's just say a good number of them yesterday. Once we have a tail and we close up here and the naked volume point of control is here, retail price, I close up here, I've come all the way across. So I have shorts in here and I had shorts yesterday in here. So that changes it. That also puts these shorts on the hit parade potentially. So for me, that's why for me, longs today looking to come up here, because these guys, they need to get abused too, right? Why leave them out? So, and we have the big report tomorrow, who knows? But, so for me, it's this. So no short bias for me. In fact, the higher time frame is still up. I mean, that hasn't changed. Let's call this intermediate time frame. Okay. So all this was a flush the financial commode, blow out the weak hands, let the strong hands pick them up. What was this? So you see what this is here? How the market tends to work. If it gets too long, it'll rebalance itself. It'll blow out the weak longs. Then call it the quote smart money, whoever they are, they accumulate down here, and now they're going to go after these guys potentially. And that doesn't mean they will, but they might. And as long as they might, it's only longs for me. So now you could trade any way you want to trade. Well, there's our scale. Right? So you could trade this any way you want, But in mean reversion, this is where you're trying to come. So any trade you put on out here. And the thing about this is the discipline to be patient is the hardest thing for us because we are, I call it Jekyll and Hyde. Hyde is, I don't want to miss it, but you want to be sure. So what happens? If you're looking for certainty, then you're not going to execute where it's at to your advantage and your risk is the least amount structurally. So this trigger, the entry, based on structured trades that I've shared in TraderLab. And what I've done is I've tried to help developing traders use structure so it can create consistency in your behavior. Again, it's measurable. Let me just show you this. I'm just going to show you a trigger. Now, the problem, of course, with all of this is we don't know what's going to happen until hindsight, right? So that's why you don't have to be trying, because if you're getting in, you won't get in here. You'll probably get in up here someplace if you hit market. If you put your limit order out here and your stop 3 ticks under here and a scale here, if that fits your risk reward, again, you have to vet that. This is your scale. And your stop stays under here. Now, if it's 3 ticks under here, would you have been stopped out? You would scratch. Now let's look at another one. Into the liquidity. You're still above this level, right? That's our key level. So let's look at another one. Now, if you took along here, there's a trigger. You got long here and your stop was 3 ticks under here, I think you'd be stopped out. If you got long here, you get your trigger, your entry would be here. And that one gets to, to the scale. Why did this one go to scale and the one before didn't? It's random. That's just the nature of it. And the target, by the way, that you'd be going for up here would be this. Because all you're doing is this. This is what you got at the moment. Now, if it changes, it changes. But until it does, it hasn't. didn't get to the next target. That's what this is, outside in, and then there are stops are going to be out here. So if it gets here, which is the idea of this long would be to go to there, and ahead of here. That's all this trade would be for me. And just like everybody else. So I'd have a scale, and if it comes down here, I get taken out and scratch it. And then I'd be looking further outside for the same trade. Not a recommendation. I'm just saying this is what I would do. But the only reason because that's the condition of the market. Okay. The real answer for all of this is, where's your trade? Do you have an edge? And it's not about my trades or anybody else's. It's about understanding how the market works. And then you put together a plan that you can groove with, that you can relate to, fits your objectives, and is psychologically aligned. The joy of randomness, right? So what do we have here? We have a trigger, right? Scale. Support. Still looking for this and out to here. Now that's just the structure, guys. I don't know what it'll do. But if you understand mean reversion, then you'd just be really trading these rotations. Trying to come here and then out, and then this. And this trade could just be out to here, and it could be done if that works for you, or if you're trading a little larger, you have to get through this to go higher. Now, whether it'll do that or not, it's not for me. Primarily what I do is I break the market into chunks. If this is too high, then I'm just going to work this kind of thing because I'm just trading reversion. So I really compress my targets. I get very patient and just wait. You can still have a decent day doing this, but you're going to end up in rotational trading. You're going to have just more trades. But that's okay, as long as you have an edge, right? Peepaw, hi there. People sell at highs of the day, but that's also areas where breaks and trend happen. So how do you know which it's going to be? There's no way to know. We only know in hindsight. So as traders, we have to deal with randomness and the unknown. So that's where trade plan comes in. So we don't know. On my longs, this is the primary target because of the probabilities and what happened down here, the ETH low. I already got this in my mind, and I literally mean that. This was secured. So then it was the other way to go for this. Then if I can go higher, this is my next target. So this is the extended target for me for today. Doesn't get there, doesn't get there. It's okay. So this is what I've got right now is the market's just rotational. It looks like the early buying is done. Now the longs are still vulnerable. If I do come under here and I'm staying above this and I come back in here, I already know what my trade might be. I'm not recommending it because if things change, I don't take the trade. But if I come out here, I can still come back in. So if I come under here, this would create something called a neutral day. And that means both sides are active, but nobody's really running with the ball. So if I can't get above here, and then I take the longs out, I can still come back inside, and that sets up the same trade. It's mean reversion. So that's kind of where I'm at with this thing. So it's still reversion trading for me, unless it changes. So that's it. Sticking to it, unless it changes. Does that make sense? So Peepaw, there's no way to know high, low, or anything. we can get ideas of where the market might go based on probabilities, but we don't know if it'll do it, how it'll do it, when. All of that is random. So that's, of course, what makes trading so difficult for us, is because we seek certainty. It's just human nature. It's fine. But here we have to kind of come at this from the perspective of anything can happen at any time. You know, a tweet comes out, this thing could do the Acapulco cliff dive. Anything can happen. So with that in mind, we really just have to try to recognize and define the condition of the market, have it defined. So and I do it from when I built trading systems. You know, it used to be conditional statements. So it's like, if this, then that. If not, then what? So if X is true, then blank. If it's not true, then what? And if something is true now, but something doesn't happen, then what? Then if I can't get back there and I have longs in the market, then what's the possibility? Then what? This is why I have a couple scenarios here. I can come out here. If I come out here, if I come out here, then that. It's called the IBF. If not, which means it doesn't come back inside, then what? Then there. So it's either out, in to there, out, back to there, or out, Acapulco cliff dive, you know, which anything can happen. So basically, I can't pick high, low of anything. I don't try to. If it happens, it's totally by accident. But I use levels and I understand market mechanics. I can't predict anything, so I don't try. My thing is alignment. If I think I understand the condition, then I'm going to be looking for alignment. That's why this would be a long there, because that's the condition. That's the mean. So this is reversion. You know, trying to come here. This is reversion. If I fall out, then I take the stops out of these longs. And then if they're absorbed and I see the buyers come back in and pick, because we pick off the weak buyers, then it's a long again for me back here. That's still mean reversion. So mean reversion, we can just be doing this to there, or we can come out and go there to there. Or that whole thing falls apart and then it's nada. So anyway, I hope that helps you, Peapod. There's no way to know what it'll do. All you got, and this is trying to define where change might take place and anticipate where it might take place. I anticipate that we'll come here in mean reversion. I also anticipate that there's stops under here and we can come there. So I anticipate that also. If I come out here, I anticipate I might, after the stops come out, I might get buying to come back there. That's okay. So that's just the way I operate. I don't know what it'll do. So it's an alignment thing, you know? I hope that makes some sense. How are we doing in YouTube? Hope you're getting something from this. It's just that kind of day, you know? I find for myself in rotational days, I take more trades and I tend to take more stops or scratches, really. I don't take a lot of stops, but I do take a lot of scratches in this because until the outside edges are defined, you don't know, right? So when you get through this, why would you not think the possibility exists to come back to this? For me, that's my next target. I don't know, you know? And if I never get there today, then okay. Then it's just, that's it. So let's watch this. Remember what's vulnerable. This is vulnerable. We want to be aware. So if you have a trade plan that's been vetted, you already know what you will do based on what based on your plan. You know, you might be getting long with this to there. If you got long here, there was absorption. You're trying to go there. If it falls out the bottom, you're going to see what happens here. And there's a structured trade called the IBF. It's a mean reversion trade. We had it coming down from the top, and we also had it, we might have it coming up from the bottom. Let me show you the one coming down from the top. So this one, don't forget, we're going for the ETH high for the longs and out, and we keep going. Now, right here, let me show you this. Now, this is only with the benefit of hindsight. You know, everything's great with hindsight. So right here, when you have this chop, chop, chop going, what you need is that. Or to get a shallow rotation, it has to hold that. So you have that too high, and this is your outside edge. So when you see this come out here, what you're looking for is, this is a low volume node. This is the same as what this is from the ETH. This is what a low volume node looks like. And that's because the market moved quickly. And then this is poorly auctioned. So the market can come down, test into this, and then return here if that trade worked. Okay, it'd be called the IB continuation trade, but it didn't. What happened is right here, it fell through. Now, when it falls through, it sets up a potential short, subject to your plan. Now, for me, I'm not taking shorts, but this could be a short. And here's why. This is your support. This is where you're looking for buyers. Right here. We didn't get them. Now we break below. This is called the IBF. Now, the IBF is a reversion trade from the other side. Your entry would be here, there. Now, the problem, depending on your plan, is from entry to here, because this is the mean, you have to have enough range for entry to get risk neutral, and then you'd be holding. And you can see how it comes back. So that's that. And again, that's not my trade. I'm just saying it is a structured trade. But for me, it's not in alignment with the context, so I don't take it. It would be an exit for me. But you have to decide how you want to use these things. You know, is it a short for you, or is it an exit from longs? You see, you can use these things either way. Is the context up? Well, if it is, maybe, then what's our next opportunity? Well, if we take this out, then out, as long as we're above here, then maybe out here, and it's the same trade from a different location back here. What is, think about this. If we come outside and come back in, it sets up reversion back here. If we do the same thing from the other side, it can set up reversion back there. So that's why I'm looking at it the same way, there or to there. And it can do anything, and doesn't mean anything other than that's what it might do. So then my job is just to wait. And if this trade, you know, gets taken out, it's a scratch, and that's the end of it. But then it's next location. This is kind of like bus. Get on the bus. And as long as you know you have an edge at whatever location, then if it's vetted, you have an edge, it's your trade. But you also now would know if, because where's the stops? Out here. The longs in here have their stops under here. And that means here that we can come out here. And then once they're out, if that does happen, that's so important, because if it's just stops and we see the icebergs and we get a buy trigger, then if you have that vetted, then this might be a long to come back there. So that's what I know. And I'm not saying anybody should do that. I'm saying is that's something you would research, see if it actually has an edge. Yeah, thanks, Rich. How you guys doing in the Bookmap Discord Trader Lab community? How you guys doing today? Um, the You're asking about the high liquidity bars. These, I'm not sure which ones you mean. Okay, we're coming now outside. This is absorption. Now remember, our stops are under here. So we're looking at this and out here. And we'll see what it does, okay? Guys, not a recommendation. Everybody take stops. You don't need to take mine. I take them. Now this, I have nothing to do. And the reason is we got a ton of stops sitting under here. So this, and I'm only talking about me, I have nothing to do here. Because what the idea of this is, if we can get these weak buyers out, which are sitting right under here, that's the time it would be worth observing it. And if you have an edge with that, that you've vetted, then you know what to do. Because it's the IBF, it's a structured trade. So if we come out and come back, that's the IBF, and it sets this up. It's the same as getting short from up here and coming back there. It's same trade, just other side. It's designed specifically for a two-sided rotational market. 252 sell stops came out, and the icebergs are on this side. This is our outside edge from the ETH. You know, this is our area. So, and again, I'm only talking about me. This doesn't matter what it does from here. If it goes back up here, it's not my trade. It doesn't matter. You have to kind of look at it that way. Because if you're going, gee, I shoulda, then you don't have a plan. Now, emotionally, you might feel that if this goes up here, you go, gee, I should have got in there. Well, then I'm going to say two questions. Why didn't you? And if you're only looking at it in hindsight, then no, you don't have a trade here. So there's no reason to do anything here unless you know you have an edge. What I know is there's stops here. So that's it. So I don't need to know anything else. I just need to know that I don't want to join the longs in here at the moment, since they're the ones who are now getting nauseous. So, but when they come out, if they do on those stops, then it becomes interesting to observe what might happen out here for a return there. So that would be the idea. It's a mean reversion. And if you're interested in this, you know, most of the time the market's rotational. Even if it's large rotations, the behavior is generic. The range of the rotations are a variable. So, you know, we could be trading from there to there, right? Or out here to there. It's the same trade, just different location, but it's the same context. So when you're looking at trades, it's not to keep busy and have FOMO. I always think about it like, if I'm going to take a stop, which of course is anytime I put a trade on, then I want it to have more going my way, and I still take stops. But do I have anything? Do I have an edge here with the stops below me? Or do I have a better opportunity out here if it meets my requirements to come back there for the same risk? You see what I'm saying? Oh, that makes some sense. Give a like if you're visiting in YouTube. This is a Trader Lab. Um, the Trader Lab is a community of like-minded traders who've come together to leverage their collective experience. Doesn't matter how long you've been trading or any of that. What matters is that if you don't have a sustainable process, in spite of random winners, which we all have in our development, in spite of it all, then you might want to come to Trader Lab and see if you can actually build out a business plan. The business of trading is really all about statistics. It's gaming. So if you can learn to understand gaming or how casinos operate, then you only want to play games with a statistical edge that favors you. And then you need to understand market mechanics. Why might the market come down and take this out? And of course, it doesn't have to, but that's, for me at least, that's kind of, because who's on the offsides potentially here? Isn't it the longs? So now you just sit and you wait. By the way, I'm going to just show you a brief little look at the Trader Lab so you can kind of see what's going on. Um, this is the Trader Lab chat. So there's a lot of participation, a lot of different traders doing their thing. Uh, Analysis, mutual support. So that's one part of Trader Lab. The other part is statistical probabilities. And there's a library of webinars and documents section. Thanks, Ned, for curating this. Start with the primer. It's got about 34,000 views. You might want to check it out. It's about an hour. Did that in December of 2021. Meet the Trader Lab. This is an advanced trader education portal. What it really is advanced may sound complicated, but trading is actually simple. The actual concepts that go into trading are really a simple process. The problem, of course, is randomness. So what we are trying to do, of course, our nature is to look for certainty. That's why we pile indicators and whatever else on. But the thing about it is, this is really shopping, and it's the collective behavior of the participants. And what do they think is too high and too low? Same as your supermarket. So that's what's going on here. Now, the other part of Trader Lab is, besides a simple process, it's about the business. So if you can learn what the business is, then you can put together a process that aligns with you, that you actually vet. And you need to vet it so you only engage with the other participants when you have an edge that favors you, and also helps you develop the confidence, just like the casinos, to deal the next hand. Data mining and all that, you can do. Meet the Trader Lab. Also, the holy grail of trading. How close can you get? Testing all-time highs. This is recent. You should definitely be looking at that. What was the plan? And then there's a lot more. And again, Ned, thanks for doing this. And this is available to all of you. And there's a document section down here. Also, these 60 structured trades, settings, context alignment, statistical probabilities, a glossary, and a lot more. So you're all welcome. Now we're coming into our location to observe, right? So if you understand market mechanics, which is really important, you would know that the market goes up to go down and goes down to go up. Why does it do this? Because of inventory, because of where the stops are. We all know stops are under here. Now we want to see the behavior. So let's observe it. Not a recommendation. Let's just see what happens. Okay, we still got a lot of stops in here. So for tourists, let's watch and see what it does. Okay, we're now watching out here. We want to see the behavior out in this area. And remember, the market can do anything, and these are not trade recommendations. This is a key level at the moment, this, and the possibility now is to come back inside. Now, we don't have to. It's not a trade recommendation. So now we want to watch just to see what it does. I don't call trades, so, you know, and there is no trade calling in the Trader Lab. It is really about observations, not predictions. "90 sell stops came out. Selling icebergs, buying icebergs. You got more sellers up here. Let's just see what it does. This is an outside edge. This is your IB low. This is also a low volume area and a higher time frame, intermediate time frame, 34 and change. This is an outside area to observe. All it is. This is where the 34 is. So what we've done is we've come up. We didn't quite get there. We're now in here. This is down on the other side, and we can keep coming back. This is the retail price from this day. This, we're just going to watch here and see what it does. I can tell you for me, if I don't get one more trade in for the day, it's perfectly okay because that means I didn't have an edge. So I'm not here to do something. I'm really here to wait and see what's going to happen at these areas. So this is an area now for me to observe and see what it does. Still nothing going on. And we want to watch this. See the behavior. See how this pulls? So that's an algo. So you're going to watch this little bracketer going here. There's nothing to do with these. We can't trade, with or against algos. They're different business than us. So we do want to see the behavior out here. Be interesting to watch this, guys. There's no way to know where an outside edge might show up. You won't know until hindsight. Okay, let's keep an eye, and let's just keep an eye on this. Keep an eye on this. Not a recommendation. Let's just watch it. Not a trade recommendation, guys. Now, no matter what, here, anything can happen, right? This is a trade that, and I don't call trades, but what I try to do is help you guys understand the condition of the market, why it might do something, where it might do it, and then what might the trade be. This is a structured trade. It's called the IBF. And I made it up. Who knows, right? I've been trading it for a long, long time. And the idea of it is a reversion trade. So this is the idea. Now, whether or not it gets there, clueless. It's not my job. My job is to anticipate behavior, to look at the evidence, which is right here, and then to put the trade on and put my helmet on and hope for the best. Because that's all you got. The best you have is maybe. Maybe it'll get here before taking this out. Maybe if the trade is put on, you get risk neutral. Or, because the trade, if it gets here, and that's a whole nother conversation, but that is the structure of this trade in the reversion world, the next part of the target is here. Again, I'm not making recommendations. I am clueless. But this is reversion. So if this is too low, right, then what's fair? Then maybe here. That's it. So that's it. I know it's not very exciting, but this is trading. Are our stop hunters real or no? Some say yes. People are stop hunters. I would say I trade in the stops, but I don't, because we all know where they are. That's why the longs who are in here have their stops under the low of the day. So am I hunting the stops? Well, I can tell you what I was doing was, if I was short, which is not in my plan for today, on that IBF, then it would be to there and out the bottom, because we have structure that we failed up here. But coming from the other direction, I tend to just align with one side often, not all the time, but today. Remember what my quote anchors are. This is my anchor for the longs so far. So as long as this is intact, I'm just moving around looking to get aligned for this. But for this specific trade, for me, and I always have to say it's not a recommendation because I'm clueless, but not ignorant. It's there and there. And that would be okay, you know? So that works. And then it's up to each individual, right? Hope you guys are getting something out of this. Please give a like if you're visiting in YouTube, and better if you're in YouTube is there's a link down there if you're interested in visiting the Bookmap Discord Trader Lab community. There's no cost for it. It is a business community. It's not romper room, just so you know. So it's all about the business of trading, building trade plans, managing the psychological impediments, you know, the lunatic under the hood, which we all have, understanding that and developing a business plan, and then dealing with the impediments to you actually being able to execute it. If this is about sustainability, and of course, past performance is never indicative of future results, but I think if you kind of made the rounds and done your thing and you keep waking up in the same place, I call that Trader Groundhog Day, then you might want to take advantage of Trader Lab while it's still available. There is no cost. Please give a like on the way out. Appreciate you visiting the lab today. Hope you have a great day, and I look forward to seeing you tomorrow.